We now put the spotlight on South Africa's local municipal bond market, and here to update us on the action in that sector is Dave King, Chairman of the Global Credit Rating Agency. Thanks so much, David, for joining us today. Well, municipalities are increasingly turning to the bond market to raise funds for their capital expenditure programs. Take us through the developing trend that we are seeing right now.
Okay. If you looked historically, there was very little activity in the bond markets in South Africa as far as the municipalities are concerned. With the effect of about 3 years ago, it started to push through quite heavily. And in fact, you're now at over 25% of total funding is coming via the bond markets. So it's now got real critical mass. They're now lending more in total from the bond markets than they are from the banking sector.
What's pushing things so hard in this regard? Is it merely a fact of looking at a more diversified base when it comes to funding sources?
I believe that does have a lot to do with it. In fact, I believe there's a fair amount of political pressure in terms of pushing some of these bigger metropoles into diversifying their funding sources. Because right now the rates aren't so great, and it's a function of liquidity and various other things, and quite frankly some of these municipalities can borrow cheaper from the banking sector. So it's primarily a diversification, lengthening. That's also very important in terms of lengthening those maturity profiles.
Where you've touched on the fact that rates aren't so great. I mean, it's one thing coming to the market, another thing when it comes to uptake. So what kind of appetite is actually out there for municipal bonds at this stage of the game?
Well, the appetite is good. Once again, if you see the way it's increased to over 10 billion from basically nothing with a couple of years ago, I am aware that there's a number more coming to the marketplace as well. The spreads tend to be on average somewhere for the higher rated ones anywhere between sort of 160 to 200 on average basis points above equivalent government. So there's a significant premium in there. One, we do think because of credit quality, because the local authorities' credit quality has deteriorated as a whole over the last couple of years. And two is a function of liquidity, or rather lack thereof.
While the South African municipal bond auctions, have tended to be oversubscribed, where the return on local debt is higher than for sovereign debt, the lack of a secondary market that isn't quite developed means that there's no yield curve. So what does that spell for appetite, and what stride is being made to improve that scenario?
Yeah, it definitely does impede the appetite. Certainly for the likes of foreign buyers, etc., etc. You're largely precluding them in anything that's not liquid. And I would imagine the banks, the RMBs of the world, the Investex are putting a lot of effort in terms of, because this market is getting critical mass now, and I believe it now warrants support on both sides of that.
You
trade.
touched on appetite from the foreign investor and the fact that we've had liquidity constraints posing somewhat of a challenge and denting appetite from their side. What about pure sentiment when it comes to just what they're investing in here?
I'm not really the person to answer that one in terms of sentiment issues. All I can tell you is, the foreign market is not a big market. It tends to be the pension fund market.
Well, it'll be interesting to see what kind of perceptions they have of these kind of bonds, in the current climate, economic climate globally. Let's look at where these capitals raisings are being directed to: infrastructure projects and then capital expenditure. To what extent do you see this filling budget gaps that currently prevail and actually funding those big infrastructure projects? Because we've been hearing from construction companies across the board that they're still saying government is not coming through in terms of spending.
If you look at the local government level, historically local government largely, I'm going to be careful how I word this, but not particularly efficient, let's put it that way. So you had a situation really after the formation of the metros where they really tried to focus on getting their financial houses in order, and some significant progress was made. But we actually took a view as a rating agency about 2 years ago that we would downgrade the rating ceiling for the industry as a whole, that no one can get higher than AA minus. And that's a function of three factors. One, the ongoing challenges with collections. It's not getting better, it's getting worse. We realize obviously there was going to be these high CAPEX requirements, and they're going to continue going higher. Higher reliance on grant funding, which we think is going to be increasingly less likely moving forward. And a real issue with these ongoing high operational cost increases as well. So the credit quality has definitely declined, and you've got a couple that really stand out, like an eThekwini and a Cape Town. They really stand out as being very, very strong, and they are strong municipalities. Yeah. But in terms of the way the debt has moved, I mean, over 2 years the gearing has more than doubled. Of more concern to us is the liquidity. That's down 2/3. So we found a lot of these municipalities have actually been using this grant funding, which is supposedly be given to them for infrastructure projects, to finance operating budgets. And that's of great concern. And I know the Treasury is doing a lot of work in terms of pushing people to actually deliver now.
Absolutely. That's where it's, of course, critical that these investments get made in the right place where, you've got to look forward to that payback at the end of the day, and this could be an impeding factor on that. What's interesting is that on the continent, we've got Nigeria set to overtake South Africa as the continent's biggest issuer of local government debt. What are you making of that kind of development that we're seeing outside of the South African border?
Well, particularly Nigeria is a remarkable market for us. We just about, well, I won't exaggerate, but a huge number of the states are coming to the bond markets in Nigeria. And we've probably done 10 or 12 in the last year. So if you look at Nigeria relative to South Africa now, I have absolutely no doubt in a very short period of time, the Nigerian state market rather than the municipal market will be significantly bigger.
But that's not a trend in broad Africa where we've seen a very slow uptake, right?
Unfortunately not. Nigeria stands out. Nigeria and South Africa stand out. Unfortunately, in most of the other African countries, it's basically non-existent.
Of course, we've had nice incentive come through from Nigeria. I mean, we've got Nigerian state bonds are tax exempt, and all except those of Lagos are backed by a payment order from the central government as well, which deducts coupon and principal payments from the amounts the states receive. What do you make of incentives like that? Are we putting enough incentive on the table for investors to indulge?
Well, I think Nigeria is in a different place to South Africa. Nigeria, in my opinion, actually in most cases had to come forward with effectively that state deduction. And it made a big difference to our ratings. Once they started putting these on the table, we said, well, okay, now we're prepared to give them a rating level that you can go to the market, which we otherwise wouldn't have done. But I really think South Africa has largely evolved more than Nigeria. And in fact, in the case of South Africa, increasingly the central government is saying, go out, raise it on your own. So how do you incentivize them more? It would be a mistake in the case of South Africa for the central government to be providing more support as far as I'm concerned.
So let's take a look at the outlook and the road ahead. I mean, what are you anticipating in terms of growth in the South African market relative to what we're seeing and the stride being made in Nigeria?
The growth will be high, simply because of a function of we've all got these high capital requirements, particularly in the case of Nigeria. The growth will be exponential as far as we're concerned in both these markets in this particular segment.
Okay, well, it'll be interesting to see, the kind of municipalities that actually come to the fore, because like you say, some have been more successful in implementation as opposed to others. Are there any that are lurking in the background that we are anticipating coming to the fore sooner rather than later?
Yes. Unfortunately, in the case of South Africa, there is really only the metropoles and a couple of other municipalities that we think are capable of approaching the bond market. Many of them are not really workable entities in their own right. In the case of Nigeria, much weaker. They don't have anything like the taxation capabilities at the state level, which South African municipalities do, which have a very high taxation capability, certainly by African standards. Nigeria, they're way too reliant on particularly oil revenues, and the distribution from the oil account. It brings a lot of volatility, and that's why I say in the case of Nigeria, I really think the government had to step forward, the federal government, and provide this support.